today's video, I'm going to be looking at swing trading for beginners. Hello and welcome to another acysecurities tutorial. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing we're looking at all through this video is going to be on swing trading for beginners. What is it? How's it put together? What some of your time frames might be? Some of those basic essential questions that you might have if you're new to the idea of swing trading. Now, in general, what is swing trading? Swing trading is about capturing price in a trend over more than one trading session. So generally speaking, if you were to think of this by a comparison, intraday trading really means that you're trading on that singular day. Day traders will usually try and close out all of their positions before the session is over. So typically, a trade will last for a few days up to a few months, just depending on the nature of the trade and what you're really looking at behind the scenes. Now, smaller positions are also pretty much generally exclusive for the idea of swing trading. And this is because you are putting much bigger take profits and much bigger stop losses. So therefore, your allocation of risk has to change. An intraday trader might be open to the idea of taking a full lot position on a $10,000 or $20,000 account. But in this side of things with swing trading, you're going to be wanting to reduce your risk so that you can actually move things along a bit easier and have the opportunity to look for more trades. Now, mostly it does get put in place with technical trading elements. You are looking to identify the swing, or in this case, the trend. And so that might use a number of different indicators, but you might also apply some fundamentals. If you've got an idea, for example, throughout this year about what's gone on with big tech and technology going on the rise up with the work from home front, then you could have considered that to be some kind of a swing trade if you're stuck in it for a very long period of time in that long direction. Now, what time frames can you really use? The answer of this is that most would actually use something between an hourly and a daily chart, with the most common time frame being used would probably be about a 1 hour and a 4 hour in a combination setup. Of course, it doesn't really matter too much. It's all about what you feel comfortable with. So if you prefer to use a different time frame chart, give it a go. But of course, I would have to make a recommendation that everyone give it a go with a 1 hour chart for executing your trades and the 4 hour chart in combination to try and find where some of your trends and patterns might be. And then look for the overarching trend over a week. Don't be looking for the small little moves in a singular day. Try and look for things over a much broader span of time. It does give you a couple of different advantages on this front. Now, what indicators also might work well with this type of trading? Moving averages, obviously, they will be tracking where your average of price is moving, so that gives you a bit of a better smoothed off effect on where a trend might be heading. Candlestick reversal patterns, all too important, particularly on a 4 hour chart. When you do start to see those patterns form on a 4 hour, they usually are very, very obvious, making it easy for you to then switch down to your time frames and look for a generalized idea on where an entry point might be good and narrow in that focus a little bit. Of course, you can use things like RSI or the Relative Strength Index in a variety of different ways, and support and resistance is going to be really, really important. So when you are swing trading, it is important to really get and grasp the idea of what happens in your candlestick analysis and of course your pattern recognition and the ability to really identify where trends, consolidation and swings might actually lie. Now, of course, there are pros and there are cons to using a swing trading system. Some of the pros are that it requires less time than day trading. You don't have to be sitting in front of the computer to actually look for your trades. You can be going, have a quick look in the morning, come back in the evening, have another look again. So it does free up a little bit of time. It gives you a little bit less noise from the marketplace. So if you are on intraday time frames, you're generally on those faster time frames, which, as we all know, increases the amount of noise or some of that deterrence that you might get in the market that sort of changes your opinion about what a chart may look like. You also have reduced trading size. And now, while some might look at this as a bad, I think of it as a good. The less your trade size, the less risk you have, the better your rewards are likely to be. It also gives you that more time for decisions. Because you are taking time to look between your trades, you might sit down for that brief period each day for maybe an hour at max, maybe 2, and you will have a look for some opportunities that might be presenting themselves throughout the week. you would generally take less trades than you would normally, perhaps only taking 1 a week or 2 a week. Sometimes you might not take one for 3 months. So there is a very big difference on that side of things, but it does enable you to really have a bit of flow with it all and allow you to have that more time to dedicate towards some of the other things that you might enjoy. It is probably a little bit more part-time than full-time trading when it works with this. So it does work for a lot of people that have a variety of other responsibilities that they have to deal with. Now, the important part about swing trading is that it takes advantage of some of those ebbs and flows of the market. Now, you might often find a lot more opportunities from this because you are following where things are going on a much longer term perspective. So you tend to find that your biases might not change for several weeks while you're still sitting in an ongoing uptrend. Of course, there are also very good ways to use clear boundaries with this. You can put in technical rules that you might be used to in intraday trading and still apply them to this, all just with a little bit of a longer time frame. Now, some of the cons that you might find from trading like this style with swing trading are that you do tend to get left exposed to overnight and weekend risks, meaning that you've got position that you're holding for a number of days, perhaps weeks, perhaps months, in which case you are going to be paying for it when it comes to the weekend. If there's some adverse reaction or news that comes out when market hours are off, or you've got the rollover rate side of things, then you're obviously going to be impacted by that. The reversals can also be quite harmful. If you're not sitting at the computer watching what's going on, or at least have some alerts set up to give you a notification if something is going awry, then you might find your account takes a bit of damage. Longer term trends also tend to get missed a little bit. Because you're kind of trading in between the boundaries of an intraday trader and a much longer term discretionary trader, you do tend to find that you might look at a intermediate to mid-term sort of trending is what we're really looking for. We're not looking for the absolute long term over 3 to 5 years. We're looking at the stuff that is going on in between all of that. So you might get chopped around a little bit. You get a little bit more of a whipsaw effect starting to happen. Of course, with all of this sort of trading that goes on, and like I said before, when you're holding positions for a long period of time, your trading costs will be much higher than what you might be on an intraday. You're going to be exposed to the triple rollover rates, which you would get usually on a Wednesday night. And you will also see a little bit more of costing on that side of things, depending on the market that you're actually trading. So keep an eye on that if you're going to give it a go. Make sure your trade sizes are small if you're not used to it. And then once you get used to it, start ramping up some of those things and keeping a tally on how much it might actually cost you to place a trade. Some of the other aspects of this is that it is quite difficult from the idea of where the market timing might be. And that just comes with the nature of trading in general. So it really doesn't matter too much on what time frame you're looking at. You will tend to find that the time set or the timing of placing an entry or an exit can be challenging no matter what market you're in. So, in this instance, it doesn't really affect it all that much. I wouldn't count it so much as a con, but I thought it necessary to have it on this list. The biggest one that's going to be the most challenging that I think that a lot of people will struggle with, particularly if you're coming from an intraday trader to a swing trader, or perhaps a longer term guy right down back into the swing trading elements, is it's a different mindset. You need to have a little bit of stone in you to be able to sort of handle some of the swings that do go on. You might find that a position is negative before it is positive sometimes, but obviously that comes down to your timing. You're trying to hope that you can get the right entry timed to get the growth going back up. So you will also tend to run a little bit more drawdown on occasion than what you would necessarily do with an intraday sort of strategy where you cut your losses very early on, but that is why you use a much smaller trade size. So it is very dependent on how you might think about working with some of these trading styles and where things might go. Give it a go, see what happens, see if you like it, see if you've got the time a little bit better situated to this type of trading than what you might find on intraday. Of course, there are so many different ways to trade. No one way is wrong. So try and figure it out on your own. See what you like, what you don't like, and give this one a try. If it's not for you, then we'll be able to show you another technique in the coming days soon. Now, moving on from all of that, of course, if you want to get in contact with me, have some questions, perhaps it's about swing trading, perhaps about intraday trading, or anything else, feel free to shoot me a message at talktoal@acy.com. And don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.